The Federal Reserve is the central bank of the United States. Think of it as the main control center for the country's money system. It helps manage how money flows through the economy and tries to keep things stable. One of its main jobs is controlling interest rates. Interest rates are the cost of borrowing money. When rates are low, borrowing is cheaper, so people and businesses spend more. When rates are high, borrowing is more expensive, so spending slows down. The Federal Reserve adjusts these rates to keep the economy balanced. Another important job is controlling inflation. Inflation is when prices go up over time. If prices rise too fast, money loses value. The Federal Reserve tries to keep inflation steady, not too high and not too low, so people can plan and spend with confidence. The Federal Reserve also acts like a support system for banks. If banks run into trouble or need extra money for a short time, they can borrow from the Federal Reserve. This helps prevent panic and keeps the financial system working smoothly. It also watches over the banking system. It checks that banks are following rules and staying strong enough to handle risks. This helps protect people's money and keeps trust in the system. Another key role is printing money. Although today most money is digital, the Federal Reserve controls how much money is in the system. Adding more money can help during tough times, but too much can lead to inflation. Even though it is part of the government system, the Federal Reserve works somewhat independently. This means it can make decisions based on the economy, not just politics. So in simple terms, the Federal Reserve is the system that manages money, controls interest rates, and keeps the economy as stable as possible. Control the money, guide the economy.